The stock market has had a strong rally since early April. You may be surprised to find out that it's the retail investors that bought the dip. The black line in the top graph shows the individual investor ETF flows. In other words, the retail investors. Look at this, they're buying huge, pushing the market up. This green line here shows the professional investor ETF flows. In other words, institutions. It has been going down. This market has been driven higher by retail investors buying the dip since early April. In fact, on Monday, May the 19th, you can see that individual investors bought a record $4.1 billion in the first 3 hours of trading, the most ever in history. There is a disconnect. If you take a look at this white line, this is the individual investor allocation to stocks. The blue line is the individual investor sentiment, which is extremely bearish. And over time, you can see there's generally a relationship between the two. So we've seen this bearish sentiment, but individual investors have maintained a high asset allocation to stocks. We can see it starting to turn lower and perhaps following the sentiment down, which would not be good news for the stock market.